Hello and welcome. You're watching Bloomberg Queen. This is Countdown, and let's take a look at the headlines that we're tracking at this hour. Sensex sets a new record on the first day of the new financial year as investors bet on the Reserve Bank of India rate cut on Thursday. Auto companies continue to suffer in March, with Maruti and Ashok Leyland posting its drop in monthly sales, with tractor maker also seeing a sharp drop in sales. And Welspun Corp gains nearly 9% after it plates and coil mills transfers power business to a subsidiary. And SRF recovers some of the morning losses but is still trading in the red after the Gujarat Pollution Board shuts down its Dahej plant.
Well, welcome to Countdown, and the markets are doing extremely well in trade. You could argue that the Nifty Bank could have participated more, but it's done its fair share of load lifting over the last few weeks, and in today's session, it's the non-banking names that are doing well. Not that banks are down and out, but non-banking names, the likes of Reliance and some of the others, are the ones which are doing well. The Nifty Bank is a bit subdued today. We should get the turnover up on the screen. We should also get the market breadth up on the screen just to see what's happening at the broader end of the spectrum as well first, before we do anything further. So the volumes today, at least on the F&O side, are a lot lower. Cash market volumes reasonably okay, 27,000. We'll not touch 48,000, I reckon, but still not a bad number for sure. Interesting to watch the FI numbers in the trade today. The market breadth should come up on your screen. Let's see the advance decline ratio. Healthy, about 1:4 in favor of the advances, and it's not showed any signs of cooling off, which is actually a pretty remarkable sign. Let's bring up the list of the losers and the gainers on the Nifty first before we talk about the mid caps and the small caps. The heat map up on your screen, and a lot of green, including the likes of Reliance and metals. But Tata Motors hogging the limelight today, up about 7%. By the way, some of the other auto stocks too have seen a bit of a pull back. Maybe the going has, except for tractors, has not been really so much worse off compared to expectations, is what I'm saying. Tata Motors up 7%. The commentary from the management about maybe the worst being behind, and it's a reiteration essentially, but the stock has done well. We'll get Yatin to talk about this, of course. Maruti up about 3% when he had a chat with them, so that's something that we'll focus on as well. Old economy has come back. Hindalco, Vedanta, Tata Steel, Larsen & Toubro, Ultratech, strong show. Reliance Industries about a couple of percentage points, so doing very well, and not too many losers. In fact, Cipla has bounced back quite admirably from the lows of the day, just about 0.5%. Oil marketing companies slightly lower, Z slightly lower, but these are tiny tunes in terms of weightages. So the heavyweights are doing well, or not doing badly, and a lot of old economy stocks have done very well. That explains to you why the markets are doing what they are doing right now. Just a quick glance at the mid caps and the small caps and see what's moving and what's not out there too. You would probably see metal names even at the broader end of the spectrum. But here's the list of the gainers. PNB Housing Finance up 6%. Aditya Birla Capital about 6%. Sterlite Tech has a 4.5% uptick. Union Bank of India about 3.5%. And Apollo Hospitals. Losers, yes, there are. Prestige Estates, for example, 3.5% down in trade. PFC is down. REC is down, and there is some losses for Edelweiss Financial. So some high-flying names have pulled back in the session today. A small cap index would come up on your screen. Maybe that has some more pronounced gains. Yes, some of the stocks certainly are. So Delta Corp 6.5%, Welspun Corp 8.5%. Cement names, JK Lakshmi, India Cements, etc. have done very well, and we'll talk about them in some time. So those are doing very well. What's not doing well? Well, not too much. CG Power, despite the upgrade, down today. Oriental Bank of Commerce slightly lower today, and Jet Airways marginally off, but not too many losers. Frankly, it's a day or an afternoon that belongs to the gainers. Agam, what about the more liquid universe? How are the volumes there? How are the positions getting built up?
Sure. Well, naturally, we will see a lot of longs considering we are seeing the Sensex advance. There are a lot of expectations with that the Nifty should follow through ideally. And along with that, we are seeing some amount of traction building up in your futures and options space. So let's start by talking and taking a look at how you're seeing futures in the Nifty 50. The April futures, mind you, are at around nearly 11,800. That's what it's quoting at, and look at the premium. It's at a 79-point premium currently when it comes to this April future. So there certainly is a lot of bullishness here. Why, even though the open interest has not surged, it is still up as much as 1.5%. But a lot of longs explained by that premium that we are seeing with respect to your underlying. how does it play out in the Nifty banking futures? While we are seeing a little bit of unwinding here, a little bit of profit taking perhaps coming through, well, the Nifty Bank again is trading, showing a lot of strength with about a 0.5% increase there. The India Volatility Index will tell you something. Now, it's inching towards the mark of 18, which means some traders may be bracing for a near-term, well, I would say, if not a price-wise correction, then a time-wise correction over the next 1 or 2 or perhaps 3-4 weeks. That said, the fact that the India VIX is inching towards the mark of 18 could just mean a little bit of a concern when it comes to our traders going forward. But moving on to your options premiums, as one might expect, we're seeing a lot of writing around the 11,600 put, unwinding in the 11,600 and 700 calls as well, on expected lines once again. Where does it leave the open interest distribution picture? You know, just last week we were highlighting the fact that the 12,000 call had now resumed in terms of activity, and we've actually seen a lot of build up around the call. Though you know, your max OI as far as your 4th April expiry is concerned, that stands at around 11,700. But if you leave that aside, on a cumulative basis for the expiry of 25th April, we're looking at maximum open interest around the 12,000 call, which means an upside from current levels is something that the traders are not ruling out. In terms of stocks again, well, plenty of ones out there in focus, but Tata Motors, of course, along with a whole host of other companies in this particular sector up and about. Tata Motors also one of the top gainers on the Nifty and looking at a lot of longs building in. So we're seeing fresh buying coming through in Tata Motors. Moving on, Hindalco is the other one. And if it's and you know, if you leave the auto sector aside, the metal pack is the other sector which is doing very well. So Hindalco up and about, also seeing a lot of longs coming through. We have Ultratech Cement, and this is the third sector which is doing very well, along with the rest of the sectoral you know, constituents here as well, up 2.5%, 8.5% increase in open interest. And the final stock that I want to address is perhaps towards the losing end is CG Power. This is down 3%. So longs unwinding even as its open interest declines by as much as 7%. But on the whole, it's turned out to be yet another very, very strong day of trade, particularly for the large caps, Neeraj.
Well, it's global in nature. The rally, as we said at the start of the trading day today in trade setup, that it's not just India, world over. Some record levels have come back, dating back to a few years for the S&P 500, for crude, for emerging markets, for ETFs by and large, save for Turkey, or every other ETF giving positive returns. So it's been a fabulous first quarter. Can this continue? Let's get in Nick Parsons, Thomas Lloyd Group, joins us right now on the show. Nick, good having you. Thanks much for joining in. Just a small word, of course, on India or on the world before we move center stage to what's happening out here in emerging markets too. Risk on for sure. Do you reckon this can last?
Well, markets are liking the fact that there's the prospect of another rate cut coming on Thursday of this week. All the gains in the Indian market this year have come in the last 4 weeks. Remember, at the end of February, we'd seen virtually no change whatsoever for the first 2 months of the year. So India's taken off over the last 4 weeks. It's taken off really since the first rate cut of this cycle. And if the currency market can respond in a favourable way and shrug off any likely reduction in rates on Thursday, then I think that does set the scene for another leg upwards from here. So I think things are set fair both from a global perspective and from a local perspective. But of course, it's the currency market reaction which will be key. And the rupee has been below 70 against the US dollar every day since the 12th of March. And so as long as we're below 70, I think that's the sign that international investors are comfortable with present conditions.
The conversation, Nick, that you gather when it comes to money being poured into emerging markets. So like I said, it's not just India specific. Across the spectrum, the color of the money coming in is green. I would reckon it's largely ETF-led flows and not really country-dedicated flows that are coming in. Can this continue?
Well, I think it can continue. After all, we've got a Federal Reserve in the US which has taken rate hikes off the table. The ECB has pushed out its own plans to tighten policy. There's no chance against the current Brexit uncertainty that the Bank of England will be raising interest rates. And so if you look around the world, there's only some very isolated instances where central banks are going to be raising the cost of money. So if we are going to see interest rates at zero, if we've got this continuation where bond yields, where we've got almost $10 trillion of bonds which have got negative yields attached to them, then investors are being forced out along the risk spectrum. They're being forced out into emerging markets as well as developed markets, and barring some policy surprise, barring some exogenous shock, if you will, that is simply unknown and unforecastable, then without one of those unknown unknowns occurring, then I think the markets look set fair during the second quarter of this year.
Right, Nick, the advances in the Indian markets are attributed to the kind of liquidity that the globe presents at this point in time. But how do valuations stack up for Indian markets when you compare it to some of their peers?
Well, if we remember back to 2018, the Indian market was the best performing of all the major EM indices. Now, we then took a breather for the first 2 months of this year. It didn't participate in the sharp rally simply because it hadn't been sold off. The market was very resilient through the month of December, and that resilience is something that investors remember. So if you've got a resilience and if you've got an emerging market universe which is doing well, then India, notwithstanding what seemed a few weeks ago to be some growing political risks, those risks have eased somewhat, and therefore India has come back very much onto the radar. It may be an emerging market in terms of stock indices, but it's certainly not an emerging market when we look at the actual size of the economy. India this year is going to cement its position as the 5th largest economy in the world. And that, of course, is itself going to be a magnet for further inflows of funds.
Nick, you also alluded to the rupee in your previous answer. We want to know your assessment of how you're seeing the rupee. Is this largely because of the inflows that we're seeing a strengthening of the rupee, or are there other underlying factors as well which are playing in favor of the Indian rupee against the US dollar?
Well, I think one thing which has favoured it has been this perception of a somewhat diminution of political risk. Through the start of this year, there were some opinion polls that suggested Mr. Modi might well be struggling in the elections later in the second quarter. Those fears that some investors had have eased somewhat, and with politics I think becoming less of a factor, and most notably the way in which the currency was able to shrug off the first interest rate reduction from the new RBI governor, those things together have added to the attraction of the rupee. I would stress, though, that is momentum in foreign exchange markets can be quite a fickle thing. And although we've been on a 68 or a 69 handle ever since March 11th, March 12th, were we to go back above 70 and were we to threaten that 200-day moving average, which lies just above that, then I think that would be a signal for some pause at least, and perhaps even short-term reversal in the equity indices. But as long as the currency is stable, because that is first and foremost what international investors are looking at when they consider emerging market stocks, Turkey being a very good example of why investors are not chasing a stock market, Argentina, of course, being another example that the currency risks overwhelm the prospective local currency returns. So as long as the currency remains stable in India, that is going to encourage further inflows, and we see a positive cycle developing. But of course, we can't take that for granted. We're going to see the need for some correct signalling from the central bank. We're going to see a need for continued improvement and stability in the macro numbers. And if we get that against a background of currency strength, then the outlook for the second quarter seems set fair.
Okay, some more news, and after a while I reckon that the GST collections have crossed the 1 lakh crore mark. The total gross GST revenue collected in March 2019 is 1,06,577 crores. This is from the Ministry of Finance. So, well, rightfully so, there has been a lot of skepticism about what the GST numbers and how, I mean, as in the fluidity and the robustness of the GST collections. They have been marred, they have been iffy, but these numbers look okay for the month of March at least. The average for each of the months in the year gone by, I think, is somewhere close to 98,000 crores. So keep that at the back of your mind. Nick, I know we started off the conversation with an India thought and then moved on to the global markets too. Just drawing that scale back to India, the macro, difficult to discern what the macro is, but let's try and identify what could trigger the market. These GST numbers, one number, if the numbers move up higher, then it's actually a much better sign. Question marks about how badly the growth will get impacted, though the jury is out about whether India will still remain the best growth market in FY20 or no. But all of this is good at a good price. Currently at about 19-20 times, even though there is easy liquidity, would you reckon at some point of time the liquidity will take cognizance of these higher valuations? Because I reckon that even though EMs have moved up, the relative valuation of a lot of other BRIC nations or emerging market nations is a lot lower than India. Does the hefty growth compensate for it, or would you reckon that this is about the valuation that you as an investor might be willing to pay for India?
Well, I think India is fairly valued at the moment, but as long as the global background continues to remain stable and favourable, and bearing in mind that the month of April is traditionally the best month of the year for stocks in the emerging Asia universe, I think 77% of the time in the last 30 years we've seen the best performance coming in the month of April. I think we've got a market timing is looking good. The economic fundamentals look good. We've seen a somewhat improving fiscal background, which is easing those concerns that we might have, in some sense, an unaffordable pre-election giveaway. And I think that if we look at the size of the Indian economy and see that it's going to have growth, real growth, with at least 6% this year, 6% of a very large number is still a large number. And it's the absolute amount of economic growth that we're going to see, which is really starting to attract attention amongst those international investors. Who would have thought 20 years ago that India could be the 5th largest economy in the world? This year it's eclipsed the United Kingdom. Last year it overtook France. It's already ahead of Italy, of Russia, and all the countries which previously it used to trail. So India is a large and growing economy. It's a long way to go to be looking at 4th spot, which is currently occupied by Germany. I don't see that happening in the next decade, but certainly cementing its position as the 5th largest economy in the world is something which a growing number of international portfolio managers can simply no longer ignore.
Absolutely, Nick, and we're going to continue to track some of those aspects that you've spoken about. But on that note, Nick, I would like to, thank you for your time in speaking to us about how investors and, of course, including your clients, view India at this point in time. Thanks so much for joining us here on Bloomberg Quint. But moving on, the diagnostics players are facing trouble in a highly competitive market, says Haitong Securities. The brokerage conducted a survey on pricing by frontline diagnostics diagnostic chains in India and found that there is trouble, especially in the B2C segment. This comes ahead of the Metropolis Healthcare IPO, which opens in a few days. And Darshan Mehta had a chat with A Velumani of Thyrocare Technologies and began by asking him about the situation on ground. Here's what he had to say. Listen in.
See, it was expected by me it would happen, and I fully agree with it is happening. And there is a challenge for organized players. Organized players comply to all rules, all accreditation requirements. Organized players pay 40% tax on their profits. So how organized player can compete with the small unorganized player who doesn't pay any tax, doesn't comply to any of the quality requirements? So it is certainly an intense competition. And fortunate for the small players, this business is too profitable in too small volumes and too high volumes, not in between. The reason is there are two beasts in this industry. One is B2C, another is B2B. Small players are in B2C, where the customer comes and pays a very decent amount. This competition has not resulted in any benefit to the customer. This competition is a B2B intense competition. So somebody is focused on B2C, they face less problem, but they don't have volume. The minute they start venturing into B2B, they have to compromise so much on the rate for getting the B2B business. That is what probably this report has given as very tough and very difficult. But if you notice it, common man still continues to pay what he used to pay earlier and sometimes even more.
So what's the sense that you're getting in? Because the other thing that was also noticed is that, the test, providers have been running aggressive promotions to gain market share. And this will be both on the organized side as well as the unorganized side. Is this strategy of, higher spends on promotion sustainable for, your financials or any other financials of your listed entities going ahead?
The listed entities have a comfort of too big volume, so they are less challenged for profitability. They are more challenged for further growth. But today, not only these B2B, B2C segments within the pathology industry are challenging each other, there is another competition between online aggregators and then conventional pathology laboratories. Earlier, patients were walking into conventional pathology laboratories. Today, they are shopping online. So the online guys are very much on reaching to the end user by various digital means. So the entire market also is getting divided into digital and non-digital. Digital is moving more towards aggregators, less towards laboratories, and non-digital continues to be with laboratories. So there are complications. This industry, I don't think, will be understood for another few years till 10 listed players are in the picture. Until that time, everybody guesses, and I don't think any report is totally reliable. Having said that, the space is getting highly competitive. That much I can agree.
Coming to Thyrocare in particular, I think one concern that, I read in a couple of reports and when I spoke to analysts is that at least for the past few quarters, the growth somehow seems to be slowing down. Despite a lower base that was there last time around, growth hasn't actually picked up. Is that a valid concern?
I am having a CAGR of 21% for the last 5 years. And if some year it does very well, comparatively it will be low in the next years or next couple of quarters. I have a reason to believe I am the fastest growing still. I don't think that is anywhere challenged. Having said that, I am also not happy with the number of CAGR of 21. I want it to be 25.
So what's...
But this year growth has been low.
Okay, so what is Thyrocare strategy now going ahead in terms of growth, in terms of maintaining sufficient operating profits?
Wait, other illogical players burn out.
Okay, but that's your strategy. What are internally? What are you planning to do? Are there, are you looking to increase promotion spends? Are you looking to increase marketing spends? Are you looking to get costs down? So others is fine, but internally, what are you doing?
We are coming back to B2B, very focused in B2B because our strength is laboratory floor and our economics volumes have helped us to keep every cost low. So we are not keen to spend money and acquire customers. We are keen to get, my customers are laboratories, and I'm going to continue to focus on laboratories. As long as laboratories are giving my reports, that is B2C business through someone else. So my strategy is going to be more aggressive. This I've been telling, but then, you know, any aggression in this country is not adequate because country is too big.
Okay. The other thing that we've seen as far as diagnostic space is concerned, that the companies are now increasing focus towards the wellness segment, towards the bundled test segment. Is that also something that you believe will have high potential growth going ahead? Is that something that Thyrocare is looking forward to?
I introduced this Arogyam in the year 2002, and it is now 17 years on the market. There are 400 players in the market exactly copied my menu and exactly copied the packages. So packages are working well. I am sure this packages business will continue to grow. So what is truth? Sickness is not growing as much as wellness is growing. So everybody is there. Unfortunately for many of them, I have already blocked the pricing factor. So in that pricing factor, they will only burn. They won't be able to take off.
So how do you see the trajectory of revenue per patient over the past 3-4 years? The trend that you've noticed, is it going higher? Is it coming down because of competition? And what's expected next?
For me, B2C revenue per patient continues to grow because I am adding more and more and bigger profiles. So I am overselling, in other words. But B2B business, it remains steady. In fact, for the last 10 years, it has been same number, B2B.
And so my final question is, how do you see volume growth going ahead for you?
I think this year our volume growth has been almost, it should be reaching around 25 to 30%. But volumes have grown, but turnover has not grown because we have cut down prices in some of the tests and profiles. So I am of that opinion, volumes and value in the market is growing around 12 to 13%. I mean, in the market means it is the industry. And the small unorganized new players are trying to burn money, thinking that if we also charge low, we also will get a great volume. But to take off, it takes too much of investment. So if you ask me, volumes in the industry has not truly gone down, but organized players are having challenges because of the unorganized industry.
Well, that's Thyrocare. Somehow, after a really good first couple of years, it's not been able to cut the ice ahead of the Metropolitan IPO. It'll be interesting to see what happens to some of the other related players. However, but before we get in our experts, and by the way, the markets are now zooming up, 39,054, about 1% higher for the Sensex, Nifty about 0.83%. We are trading in or around the highest point of the day, and autos are contributing, though you must say that they continue to face a demand slowdown in March. Car, bike and commercial vehicle sales, all of them declined in the same period compared to last year. Yatin Mota joins us with the details, thoughts and some key takeaways from an interaction that he had with R.C. Bhargava as well. Yatin, what do you make of the numbers?
Neeraj, let's start with Maruti Suzuki, since you spoke about our interview with R.C. Bhargava. And for the past few months, we have seen pressure on auto sales, be it the four-wheeler segment or two-wheeler segment. Nothing is different. Maruti, this time we have seen a decline of nearly 2% year on year. And this is largely to do with the fact that the mini car sales were down 55%, mid car sales, which is basically the Ciaz, down 15% in terms of year on year growth. More importantly, they have changed how the old WagonR is classified. They now classify old WagonR instead of mini into compact. So there you are looking at a growth of 20% on a lower base. So all adjustments said and done, the overall sales are down 2%. Ashok Leyland also, the total domestic sales were down 5%. Medium and heavy commercial vehicle sales for the domestic markets were down 8%. Similar is the case with Escorts when it comes to the tractor sales. Almost flat kind of a sales number coming in there. Mahindra and Mahindra automotive segment sales were up only 1%. Of course, this is aided with the fact that the UV sales were up 5% on the back of new launches, which is XUV 300 as well as the Marazzo. More importantly, we have the commercial vehicle sales for Mahindra and Mahindra, the truck sales falling by nearly 33%. Tractor sales also falling by 30%, and this was the biggest negative surprise that I've seen for Mahindra & Mahindra. Tractor sales are sub 20,000 units. Expectation was that there will be a probable 10, 12, 15% kind of a discount, a kind of fall there, but a 31% drop is what we are looking at on the back of lower than expected Rabi sowing, according to management, and that has impacted the overall sales. Talking about RC Bhargav, we had a very interesting chat with him. He more importantly spoke about how really do the elections impact sales. He did not give a particular reason, but whenever we talk about the elections, there is some slowdown, and generally sales usually rebound post the election season. But this time, mind you, there are various disruptions happening in for the auto industry post the elections. We have the safety norms kicking in. So from today, no car or motorcycle can be sold without an ABS. We also have June, July, wherein we'll have all cars which need to have airbags. And more importantly, next year, same period, which is 12 months from now, there will be BS6 which will be kicking in, which means that no BS4 or sub BS6 car can be even registered. Forget about selling them. Companies are gearing up for all of these disruption. This will surely translate into price hikes, is what Mr. Bhargav told us. Let's listen in as to what exactly he had to say on demand, as well as all of these regulatory things coming into place moving forward for the auto industry.
For some reason, in the months before the election, people stopped buying cars. I don't think anything very major has happened in the economy to justify this slowdown on sales. At least I'm not aware what has changed from the first half to the second half, which should cause such a sharp slowing down of sales. And why sales go up again after the elections? Why they went up in 2009, why they went up in 2014, I don't know that also. All I do know is the numbers say that happens. So we are now waiting to see whether the same pattern will be repeated this year after the election.
Okay, moving on to GST, the Finance Ministry has just tweeted out the GST collection numbers in the March, and it's crossed the 1 lakh crore mark for the third time ever. But this also is because of the financial year end. That's the question that we are posing to, well, Prateek Jain, the national leader at Indirect Tax at PwC. Prateek, good afternoon and thank you for joining us. What are you making of this number, and what reasons would you attribute to perhaps an increase in this particular month?
Yeah, so I think obviously after a drop below 1 lakh crore last month, which is February was around 97,000 crore, and now this month it's 1 lakh 6,000. So obviously this comes as a relief to the government. Now look at the broader picture. If you look at 18-19 collections till now on a monthly basis on an average before this month was around 8% higher from the last year number, monthly average collection of last year, which is 17-18. That means that not only the collections have stabilized, but it is gradually increasing. Okay. Having said that, if you look at the next year target, which is 19-20, there the increase projected is around 20% from the current overall number. So how can this 8% average increase move to 20% next year is a big question for the government. Now, the significance of this month's number is that if you look at, the months where it has exceeded 1 lakh crore in the past, those months have been April 18 and then October 18 and January 19. And typically at the end of the quarter, you see a sales push and hence, it increases. For the first time, you have an increase in a month which is not the end of the quarter. Okay. Because this is for February 19 number that we're talking about. So government would hope that this trend continues, because if you look at this month's number, that is 10% higher from the average collection of the last year's number. And government would hope that this 8% moves to 10% and gradually it becomes to 12, 14, etc. But the larger question still I have is that what will happen so drastically now that 1920 number would be 20% more than the current year number, and that's something which the government will have to think about. I think the larger question, the issue which government wants to address is to check the tax evasion, and they have not got their hands on that as yet. A lot of work has happened on that, but how successfully they can plug those leakages will determine whether 1920 numbers are met.
Prateek, afternoon, I heard you mention that you believe that the numbers are now increasingly looking stable. Would you believe that if the numbers were to dip substantially from those levels at any of the months in the near term, it would be more an aberration and not necessarily a norm?
Yes, it will be, and I doubt that the numbers will, dip drastically. I think the March number, which will come in April, is obviously likely to exceed 1 lakh crore. That was the case in April 18 as well, and as you know that the year end when it happens, there's a lot of sales push which happens, a lot of account closure happens, etc. So by sheer, sort of power of that, the numbers will increase. I think that this 8% average increase in 18-19, as I said, over the previous period, would gradually increase. Now, whether that increase will be as high as 20% as the government expects next year, that's an open question. But I don't think that it will significantly from here now.
Okay. Prateek, just one last question. I remember when we had spoken to you a few months back in our studios, the initial teething problems for a lot of people with this filing and the other norms were there. In your conversations now, as we have ended the year, those things smoothen out?
Yeah, to a large extent it is smoothen out, and it's also one of the factors that the government has significantly increased the threshold, right? So the smaller taxpayers are no longer required to really file monthly returns and so on and so forth. Composition limit has got increased as well. So that has also helped. But what's going to happen now is the government is changing the whole compliance framework again. And after elections, we are expecting that to be introduced in the next 3-4 months. So again, the industry will have to reinvent themselves a bit to comply with the new regulations. But as you see the forms of the for the return formats, etc., that looks much simpler than it was earlier. So I think to a large extent it will only improve from here.
Okay. Okay, Prateek, we'll leave it at that. Thank you so much for joining us and taking us through your take of what you made of GST's latest numbers that we've got, which stand a little over 1 lakh crore rupees. But on that note, let's shift focus back to the markets, and Nifty is going from strength to strength and currently trading near day's highs at 11,730. It's up nearly 1% now, certainly above 100 points. So gains coming through steadily as far as the benchmark indices are concerned. And on that note, I'm going to get in our technical experts for the day. We have Hemant Kapadia of KR Choksi is joining us, as well as Sumit Bagadia of Choice Broking on the show. Thank you to both of you for joining in. Hemant, there's no letting go. There's just, the momentum continues. Enjoy the ride?
I guess so. I think a trailing P is 29. VIX is at 18. Overheated markets make hay while the sun shines. Disconcerting, but I mean, it's going up every day, right? Bhav Bhagwan che, there's a rotten dialogue, so you stick to that. I guess so. But I would be very, very careful, but it's fine.
Okay.
So what's the... No, sorry, just wondering. So, Hemant, so if you are careful, what are you doing? Are you using options? Are you initiating some fresh trades on the short side? What are you doing?
Ideally, I would have a short on the Bank Nifty, but the ridiculously high margins levied by the exchange, which were just ramped up again, make it very difficult to trade for a normal investor like me. So ideally, I would have a short on the Bank Nifty, or I would sell the 31,000 call option. But I have a short on the Bank Nifty future, but it's a conditional short at 3750. Stop loss 31,000, target 30,200. Neeraj. I think the Bank Nifty is extremely overheated. It's overbought. It's ripe for a correction which hasn't set in. I don't know whether it's the credit policy which is coming in, but if the Nifty is going rocketing up every day, okay, Bank Nifty, at least according to me, is the only event risk. Why is the VIX at closer to 18? We should have been 15. So rollovers were great. I think we started well, but I know I'd be just, yeah, on the other hand, IT is looking good. So there are pockets which are looking great.
Okay. Sumit Bagaria, what's your choice of trade right now on the index? Nifty, Nifty Bank, any other index that you are comfortable initiating a fresh trade on as we speak this afternoon?
Hi, good afternoon. We feel that both the indexes are strong. Nifty, Bank Nifty, if you remember our views, we have been giving buy views continuously from last couple of weeks. Now looking at the chart, it seems that from here on the same move can continue and we can see a good upside move in next couple of weeks too. Nifty looks strong to me. I think it's headed for 12,000, 10,000 plus levels. Those who have taken long positions, they can hold on the existing long positions. And in fact, one can initiate fresh long positions at the current market price or on dips in Nifty till 11,700, 11,680 levels should be used as buying opportunity, with a stop loss to be placed at 11,650 on lower side for the upside target of 11,800, 11,850. That would be the very short-term target for next couple of days. Overall, we are expecting Nifty to move up and touch levels of around 12,000 in next couple of weeks. Bank Nifty is looking good on charts. It's headed for 31,000 levels. Those who have taken long positions, they can hold on the existing long positions with the trailing stop losses to be placed at around 3,300 on lower side, and one can initiate fresh longs for the targets of 3,900 and 31,000 levels in next couple of days.
Okay, well, on that note, let's also take in the stocks that our experts are recommending. Well, one of them is ACC. The interesting thing about ACC is that the entire cement pack has been doing well through the course of the day. And as you can see on your screen there, ACC actually did start very well. But after hitting day's highs, it has actually come off and currently trending marginally in the red. So there seems to be a little bit of a problem. This is following the surge that we've seen in ACC over the previous 5 or 6 odd days. So there has been a continuous up move, and after that we're seeing a little bit of a problem coming through as far as ACC's price movement is concerned. And of course, Hemant, of course, here has a view. Hemant, if I remember, you did have a call on ACC last week as well, and today you have a buy call. What's going on with this one? Pardon me, sell call. So what's going on with this one?
Oh, I have a feeling one move seems to be getting over. We've seen a sell-off on very high volume, Agam. So I would be slightly cautious. But thing is, it's already come off almost more than 70 points intraday. So I am not sure this quantifies as a sell after a 70-point come off in a roaring bull market. So on a recovery, yes, but I have a feeling ACC and Ambuja both seem to have exhausted one move, and we could be walking into a correction. I'm not saying they're going to be trend reversal, but yeah, there is a correction down the corner as far as ACC is concerned.
And you also have Wipro on your radar.
Yeah, I think IT looks great. I don't know. Maybe I'm jumping the gun, but I have a feeling the Bank Nifty is ripe and due for a correction. And if that happens, something will have to salvage and save the Nifty, right? We are playing musical chairs. So if that has to happen and Bank Nifty corrects like it does, I think the one sector which has been relatively docile, stable for the last 8 weeks doing nothing, has now finally on the cusp of a breakout. So IT index looks great, Agam. So keeping that in mind, I think Wipro has been an underperformer. So buy Wipro at 260, stop loss 256, target 268. It's already moved a bit since the call, but I think I'd wait for a small cool off before buying.
Okay, and well, on the other hand, we have Sumit, who has a buy on Tata Motors, which is actually advancing for the third straight day among his other picks. Sumit, why don't you tell us about your calls for today?
I have two stocks for the day. First one is from Autospace, and that is Tata Motors. After a long time, we are seeing a good sign. We are seeing a buy signal in Tata Motor. It's a pullback and a bounce back move till 198-200 levels. Closing above 200 will give confirmation for fresh buying till 240 and 250 levels. At present, it's a pullback and bounce back move till 198-200 levels. Those who have taken long positions, they can hold on the existing long positions. One can go ahead and initiate fresh long positions at the current market price, with the stop loss to be placed at 178 levels on lower side for the upside target of 198 levels. On the other side, pharma stocks are looking good to be, and at present, Lupin looks good on charts. Today we have seen a good price action in this stock. The price action says that the stock is headed higher, and from here on we can see a move till 790 or even till 800 levels. Those who have taken long positions in Lupin can hold on their existing long positions one can go ahead and initiate fresh long positions at the current market price or on dips in prices to 755 levels should be used as buying opportunity, with the stop loss to be placed at 745 levels on lower side for the upside target of 790 and 800 levels in next couple of days.
Okay, stay on, Jamin. Just before we get in our fundamental expert on the show, just quick perspective from Upmanyu Trivedi, because the State Bank of India has moved the Supreme Court challenging the NCLAT order on SR Steel insolvency. I think the premise is that they have challenged a higher payout to Standard Chartered Bank. Upmanyu, what are you learning? Upmanyu, can you hear me? No, I don't think we have Upmanyu. Nevertheless, we'll try and connect that in just moments from now. But Sameer Kalra is with us. Sameer, we're trying to get one story on SR Steel, but metals seem to be the order of the day today. Good afternoon. Big move there. The Chinese PMI data probably aiding the sentiment too. Is this the start of something meaningful? Or do you think that the recent up move, even though it's not really dramatic, but a pull from the lows, has priced in some of the near-term positives?
So I think it's where you get 1 month optimistic data and everyone starts to run the gun. And I think what is happening, there were a lot of shorts in the metal sector because of the data which was coming month by month. And somewhere even the shorts at the Indian markets got caught off on the wrong foot even today. That's why you see a 5%, 6% kind of a move, because fundamentally it doesn't change on one month. It's better to see the data on 3-month rolling average and then guess whether the turn has come. And I think I would rather stick to that. If you see any opportunities, it's better to get out of certain metal stocks because they have a lot of issues still pending, whether it's promoter pledge, whether it's demand slowdown, pricing issues. So I think it's better to be safe to a particular names. Maybe Hindustan Zinc works out to be there. Because it still has cash on books. The commodity is not an import challenge, and these things are becoming more of other challenges for other companies. And if you see the auto slowdown on the production side of it, this hits aluminium demand and the steel demand to some extent. So I think fundamentals are still the same. It's only 1 month data which is pushing this off, and certain places it gives you a better exit point rather than an entry point.
Okay, well, I think we can go back to Upmanyu Trivedi, since we were talking about the State Bank of India moving the Supreme Court over the SR Steel insolvency. Upmanyu, what are the updates that you have for us?
That the State Bank of India has moved the Supreme Court. They've basically challenged the National Company Law Appellate Tribunal order that had asked them and the Committee of Creditors to assemble a meeting of lenders and decide whether an additional higher payout can be made to Standard Chartered. Now, Standard Chartered has a dues of around 3,500 crores to SR Steel, but Committee of Creditors, that is Standard Chartered's contention that the Committee of Creditors had discriminated against them, and unlike other banks which were getting around 92% of their dues to SR Steel, Standard Chartered is getting only 69 crores out of 3,500 crore dues. So NCLAT had asked Committee of Creditors to form the forum again and decide whether a higher payout can be made. Even though the banks have met and decided against a higher payout, the banks have now also challenged that decision in the Supreme Court. A date is yet to be given for the hearing.
Okay, Upmanyu, we'll leave it at that. Thank you so much for joining us and getting us those updates. And of course, we continue to track developments with respect to SR Steel and its insolvency. But those are, that's the latest news that we have with respect to this one. But, let's address the auto sector. And, Sameer, you did allude to it to a certain extent with respect to the slowdown. I believe you are also of the opinion that for those who are interested in the auto sector, you are urging them to wait a little longer before you start seeing some solid improvement in the numbers. That said, where do you think is a likely improvement going to come from? Would it be from two-wheelers, the commercial vehicle space, or would it be the four-wheelers then?
So I think we've just got provisional date of registrations for March, and on the whole industry level, it's like 16% down YOY.
Yeah.
So that gets revised by the 10th of every month.
Right.
So we'll look forward to that. But if you see the numbers, there's no hope coming out of the system right now.
All right.
The only hope which I have or we can analyze is a Bajaj Auto. There are two reasons to that. One, they have exports to subsidize the slowdown in domestic markets.
Right.
And second, they are already eating into Hero's share. So that really helps the volume offtake, which is helping them out of the whole mess right now. So over there, even the stock prices, if you see, the valuations have really not gone down as compared to a Hero or others. So I think over there, Bajaj Auto is one scope, which we believe that we will be able to face all this on a lower hit. It will get hit, but on a lower hit. And Hero will be the most likely the largest burdened company as of now from my side, because we believe two-wheelers will be the most badly hit system, and then four-wheelers, because they are customer-led.
Right.
They are B2C products.
Right.
Commercial vehicles might see a reversal, but I still doubt that, because financing over there is a major hurdle right now. There are a lot of documentation, due diligence, which have increased almost twofold from past 6 months.
Right.
So that is really hurting the fleet operators as well. So I think over there are a lot of mechanics which are moving out. And I would again, like I said in China terms, even if 1 month really comes up as a bump, I would still like to see a 2-month trend or a 3-month trend to judge whether the reversal happens.
So just one quick follow-up, 30 seconds, and then we've got a bunch of other stocks that I want you to comment on. You had bought Tata Motors at 150?
We bought it at 130 as well, that day when it...
So now 186, 187, reiteration that the worst seems to be behind.
Yeah, so it's the same thing, quarter-on-quarter performances will be better off. JLR cash was already better off quarter-on-quarter. It went from 600 million to 400 million last quarter. That might go to 300, 350, and that improves the debt outlook for the whole system. I think there is now scope of improvement as well. So we see a 200 to 25 kind of a target, at least in the short term.
Okay, so we stay on. So much more to talk about. Him, stay on as well. Let's talk about some companies, and Nikki and Yash are waiting by to talk about some of the big movers in trade today. One of the stocks that's doing really well is Welspun Corp, but the company has decided to sell its PCM in power business. To talk about this and the implications, Nikki Mirchandani is waiting by. Nikki.
Thanks, Neera. The stock is up as much as 8.5% today. That's the largest move that we've seen in the year 2019 so far for this counter. The company plans to sell the plate and coil mill division along with the power division. The company will be selling the coil mill division to Laptev Finance for a consideration around 873 crore, and the transaction is expected to conclude not later than December 2019. In between or before this, the company will have to have CCI approval in place. But then this remains to be important. Laptev Finance, importantly, we tried and call out some details. We couldn't figure out whether or not if it's a JSW group entity or not. We tried asking the management also, because it had some kind of information memorandum earlier which suggested that the company could have been an entity, but then the company refused to give any comment on this one. The transaction for power division now is expected to close up by May 31st, 2019. If you're supposed to look at the contribution of these two divisions for the company, if you look at the turnover for plate and coil mill division, it's a 16% contribution from this division on consolidated level, 0.12% for turnover in terms of power division. EBITDA, plate and coil mill division contributed to around 15.4%, while that of power was a negative figure of 0.14 crore. So clearly it was a loss-making entity for the company. Net worth for this company, for this division, plate and coil mill division, was to the extent of 28%, while that for power was around 2.5%. And if you stack up the valuations of these companies, plate and coil mill division has been sold off at an EV to EBITDA of 7 times. Now remember, this is an EV to EBITDA which is at par with the Tata Bhushan Steel kind of a deal. So pretty much fairly in line with what the industry standards were. But then when we spoke to the management of the company, we realized that the company has sold the PCMD division at a discount to its book value of around 1,175 crore, which is a discount of 300 crore, which in turn is expected to reflect as an impairment adjustment in the company in the financials of March 2019 to the extent of 300 crore. That's the erosion of net worth for the company. And if you look at the balance sheet perspective, definitely the two going out, the asset light model is expected to weigh in on the financials in terms that the company is expected to be a net cash company right now. If you look at the net debt to equity level, that as of December 2018 was around at 0.11 times, which is less than a one-time figure. Clearly, after this deal, the company is expected to be a net cash company. Reflecting on the stock price, the stock is up as much as 8.5%.
Nikki, if you could just hold on and stay with us, we also want to address the other brokerage note on cement. But before I do that, can we also take a look at the technicals and how they're looking on Welspun Corp? From what I can see is that it has made the dash above the 200 daily moving average. How are the technicals looking here?
Short-term positive, medium-term positive. If I take a longer-term point of view, we've spent 2 years. We haven't achieved anything noteworthy, a large range, very large range, roughly between 85 on the downside and 195 on the upside. So we've not made any progress. We've been pottering around over here. Currently, like you said, we're about 255. We saw a gap up. Volume is more than 30 lakhs. I think that's the highest volume in the last 6, if not a year. So short to medium term positive, long term going nowhere.
Okay. Well, that's as far as Welspun Corp is concerned. But let's go back to Nikki and also talk to her about the Bank of America Merrill Lynch, which maintains a negative outlook on the cement sector, despite companies undertaking a price hike across India from the 1st of April. Nikki, what do you have for us?
Well, yet another brokerage note and yet another rally for cement stocks, which have been the case right since the start of this year as a whole. If you look at what the dealer survey here is suggesting, that the cement companies across major regions have gone ahead and taken a price hike as per the dealer information with effect April 1st. If you look at the region-wise distribution, prices in South have been hiked by 6%, followed by West by 3%, and they're to the tune of around, or in the range of around 7 to 9% for East and North region. And this price hike, if taken, which the dealers have suggested have already taken place, would be the third hike in as many months. Cement prices were hiked by twice, as many as 2 times in February, and volume push. The dealers, Bank of America Merrill Lynch report also suggests that the volume push by dealers should now ease by April, because March is typically the month when the dealers kind of push the stock so that they can get more higher incentives on the amount of sold volumes that they could reflect on the financials of the company. However, as a whole, Bank of America Merrill Lynch suggests that they've retained the negative rating on the sector as a whole. Underperformance for 3 stocks, ECC, Ultratech and Shree Cement, and a neutral rating on Ambuja Cement with a potential upside of not even more than 1% as a matter. But however, the note goes on to say that price hike, if sustained in April 2019, could lead to a short-term rally in cement stocks, which already is a factor playing out for cement stocks. Back to you.
Okay, Nikki, thanks for joining us and getting us those details. But moving on, the Gujarat Pollution Control Board has ordered SRF to shut its Dahej unit. The company allegedly violated industrial waste disposal norms and installed a calcium chloride plant without permission. Yash Upadhyay joins us with more details. Yash, good afternoon.
Good afternoon, Agam. So Dahej is one of the largest plants for the company, catering to its chemicals business. So the chemicals business contributes to nearly 30% of its overall revenues, and of that, a bulk or even 70% of the revenues comes from the Dahej plant, and nearly 40% of its chemicals business's EBITDA too is contributed by the Dahej facility. Now, what happened is that over the weekend there was a development that the Gujarat Pollution Control Board had ordered the company to shut down all of its operations at the Dahej plant, and this was was on account of the inspection that they had carried out on the 25th of March, wherein they had found the company to have 2 unauthorized tankers having highly concentrated effluents, for which they did not have the requisite proposal, along with the fact that they had also installed a calcium chloride plant as well in the facility, again for which they didn't have the necessary approvals in place. Upon questioning, the company did not give proper explanation with respect to the disposal of these highly concentrated effluents, for which they do not have any approvals in the first place. As a result of which the Pollution Control Board has ordered the power distribution companies to shut down any supply of electricity, and meanwhile the company is in the corrective phase wherein they are submitting a detailed report for that record. But despite opening lower in today's day of trade, it has managed to recover back, but it still trades about 1 and 1.5% lower.
Right, Yash, thanks for joining us and getting us those updates. But I'm going to stick with the cement sector for just a bit, considering there is some contradictory, well, I would say signs coming in. On one hand, you do have price hikes. On the other hand, you also have downgrades. So, Sameer, let me take your assessment on the cement sector. How are you reading into this one?
So I think it's just making up for the kind of a cost pressure they're facing, especially on the petcoke side. The Supreme Court ruling on the kind of a cap on petcoke imports and per customer imports, I think that is putting more pressure on them. That is increasing the cost also per customer, and specific by certain suppliers. So I think over there that cost pressure is really hurting them. So even if this price rise actually stays on, they've tried to do that in March, they've rolled back to a certain extent. Now if they are able to stick to this, this will only make their margins stable or come up slightly. This won't change the whole dynamics of the demand and supply right now, where I see more supply than a demand coming out. So I think over there it might be a short-term relief for them. That might push another 10 to 15%, but I don't see a rally coming anytime soon.
Okay. Okay, all right. Well, on that note, Sameer, we'd like to thank you for taking us through your views on the markets. And of course, there's plenty of stocks as well as sectors that we have addressed with Sameer. But moving on, let's also find out what's making Yash Upadhyay's list of Fab 4 stocks of the day. Yash, once again, what are you tracking in terms of gainers today?
Magam, I'll start with Mastech first, and that was in focus today, up about 5.5% after HDFC Securities came out with a report initiating coverage on it. Now they have assigned a buy rating and have set a target price of 660 rupees on the counter, which indicates a potential upside of more than 40% from its previous day's close, as they expect the company's margins to improve going forward with the resolution of its issues with respect to the US business and scaling up of hiring business. Also, we are watching out for Intellect Design Arena, which is again up 6.5% after the company informed that it has received a big multi-million-dollar order from one of the top 20 banks in the United States. This is also the highest ever deal win for the company, so watch out for that. Metal stocks, as you rightly mentioned, are buzzing in trade today. Hindalco is up 5% after on the back of a strong Chinese PMI data indicating that there would be a big bump up in demand for metals going forward. And the last stock that I want to highlight is SML Isuzu. It's up 3% on the back of the auto sales number, which have come in for the month of March. We have seen an increase of about 14% on a year-on-year basis. Back to you.
All right, Yash, thanks for joining us and getting us the Fab 4 stocks of the day. And from there, let me just address a few other moves that we have seen a lot of traction in today's day of trade. And well, one of them is Intellect Design Arena. We do know that it has signed another very large deal, because of which it is gaining quite substantially in today's day of trade. Intellect Design Arena at 216. Sumit, if I can take your technical view on Intellect Design Arena, we have seen gains, steady gains come through, at least in today's day of trade. But what are the technicals telling you? Would you go ahead and make a new entry at these levels?
Well, it's a buy. The stock is looking good on charts. It has broken 200 DMA levels, and now looking at the chart, it seems that the stock is headed higher. From here on, we can see a move till 230 to 35 levels. Those who have taken long positions, they can hold on the existing long positions. One can go ahead and initiate fresh long positions at the current market price, with the trailing stop losses to be placed at around 210 levels for the existing long positions, and 210 would be the stop loss for fresh long positions who initiated the current market price for the upside target of 225 to 30 levels in the next couple of days. The stock looks good. It has given a good move with volumes. Volume says that the stock is headed higher for the targets of 230 levels.
All right, and well, another trader favorite of late, and I'm sure it must be certainly today's Delta Corp. That stock is also up and about in trade, and again at, well, I would say at historic highs. It's currently at 268. Heyman, how are you reading into this one?
First disclosure, I have a holding in the stock. We've spent almost a year, Agam, moving between 200 and 282. The picture now seems to be turning bullish, but we've not yet broken out. The volume, price action, volume action seems to suggest a positive bias. We've seen 30 lakh. This volume is highest on the NSE cash market, not delivery since 11 Jan. But we need a breakout about 282. Looks very promising, but till the breakout doesn't come in, 1 year of consolidation, it could take some more time.
All right, and on that note, let's get in one more fundamental voice. We have Dharmesh Kant of India Nivesh Securities joining us on the show. Dharmesh, good afternoon. Thanks for joining in. I guess the question that we have been posing to a lot of our experts this afternoon, as well as through the course of the day, is the strength that we've seen in your larger cap stocks. That remains. But what about the catch-up for the mid-caps and the small caps? That's another question entirely. Let's just stick with the large caps for now. While it is driven by liquidity, as acknowledged by some of your analysts across the globe as well, how are fundamentals stacking up, if at all this is a game about fundamentals at all?
Yeah, good afternoon. We did see a good rally into the index, but it was primarily driven by financials. So entire rally from around 10,500 to the current levels is an outcome of few of the private banks performing, followed by Reliance and L&T. So these are the participants and the key contributors to the entire push-up which we have seen. At the same time, if you look at large cap, I mean the automobile pack has not performed that well. There may be some few bounces just on the market sentiments, a couple of percentage point up and down, but that is what it has been. And fundamentals have played out there since the numbers were not there. So the selling was there. Even in auto ancillary pack, the same was being noticed. Metals, again, a cyclical play is there. So it bounces on cyclical sentiments, but fundamentally the things remains the same. What is surprising to me is steady bounce back in the cement counters. So the volume is there, but I don't think they will be having any pricing pressure. I mean pricing power. At the same time, going forward, there will be slowdown in the construction. One is the monsoon season will take on, and the second is the government spending will reduce because of fiscal deficit burden which is there. So that's a surprise to me. But the companies the stock prices of the companies which have gone up, they are having robust fundamentals, so that is being rewarded by the market on the backdrop of liquidity which is there. So the pricing and the movement in the market is pretty fair. Having regard to the mid and large cap basket, it would be stock specific and bottoms up approach. I don't think there would be a general trend of all the mid cap and small cap moving up.
Just one. Just hang on for a bit, Dharmesh, while we talk about some other movers as well. It's a successful listing for Embassy Office Park REITs. Sharad Dubey is waiting by to talk about what's the way ahead for the company. Sharad.
Well, yes, Neeraj, the company came out with a steady start, with around 2.7% premium to the listing price. So basically, the total issue was around 4,750 odd crore rupees, with the listing price being at around 308 rupees per unit, while the issue price was around 300 per unit. The premium was set at around 2.7%. Now, if you see the subscription picture, Neeraj, the overall subscription was around 2.6 times, with the institutional investors coming in at around 2.15 times, and the non-institutional investors, who are the retail investors, coming in at around 3.1 times. Now, we had a chat with the merchant bankers, Neeraj, and we saw the main institutional order book demand tranche, what it is. The first one being definitely long-only investors coming in with around 66% of demand in the institutional investor category, while the domestic mutual funds and hedge funds did contribute around 20% when it comes to demand in the institutional investor category. And lastly, Neeraj, I think the key non-institutional order picture which we see we see the order breakup, we see around over $50 million will be there for around one order. And if you see between 100,000 and $1 million, around 300 orders were set in. And lastly, Neeraj, we have taken the quote from Shishir. So he's the chairman and the managing director at Knight Frank India. He was very bullish on the success of the REIT listing, and he also stated that the REIT will be growing from strength to strength over the past few years, and the India has already transacted around 47 million square feet of space in 2018, along with sustained growth in rentals across the prime business districts. They also expect the momentum to sustain in the near future, which would encourage more participants to enter the REIT market.
Thanks, Sharad. Thanks so much for that. So that's Embassy, Office Parks, REITs, and a successful one at that. By the way, as we speak, the markets have come off a bit. The Nifty Bank holding on. I mean, it's not that there is alarm bells, but it's trading virtually at the lowest point of the day. A bit of a slide that's come in the last few minutes of trade. ICICI Bank, Axis Bank, I reckon amongst the principal contributors, though IndusInd Bank too has come off from in the last 10 or 15 minutes of trade. So these are the ones that are essentially dragging the Nifty Bank lower. Hemin, you were sounding skeptical on the Nifty Bank. 30372 now, 51 points lower. Would you reckon that today in the next 20 minutes or tomorrow early morning as well, we could be headed lower?
I think so, Neeraj. The way I look at it is that we are getting a bit top heavy. See, there aren't any levels. We are at all-time highs. But if we end at the same point that we are now, Neeraj, on technical parameter, that would mean a downward key reversal. Now, for the downward key reversal to work, is that tomorrow it breaks today's low. Then today's high becomes your stop loss to short. I have a feeling it's already peaked at 30,650. So I was skeptical. I'm still skeptical. I'd love to go wrong on this, but I think for the time being, we are getting very top heavy. I am very skeptical.
Sumit Bagadia, just looking at the slide into some of the Nifty 50 stocks in the last few minutes of trade, is there a banking name or any other that you would short? UPL, for example, has corrected nearly 3% as well.
See, banking is better to avoid short positions because most of the bankings are looking good to me. As far as your question on UPL is concerned, UPL, there is a possibility that we might see some correction or some profit booking from present levels if the stock is able to break 925 levels on lower side. It's quoting at around 932 levels. If 925 levels are taken away, then we can see a move till 900 or 890 levels. So one can initiate fresh short positions below 925 levels, and it's better to avoid long at the current market price. Also, Eicher Motor is looking weak to me. It has already given a correction of around 450 points, but still looking at the chart, it seems that the stock can move down. One can initiate fresh sell positions in Eicher Motor at the current market price. Downside, there is a possibility that we might see a move till 19,500 or 19,400 levels. Below 20,000 levels, it can give fall till 19,400 levels. So one can initiate fresh shorts in Eicher Motors.
Okay, Dharmesh, come in on banks. And let's stick with that. Let's perhaps talk about just the private sector banks, because they certainly have seen a lot of movement and upwards movement too of late. What would you do with these now?
I would be buying them because there is no choice. See, business-wise, they have been doing pretty well. All the private sector banks have delivered a very good set of Q3 numbers, and I'm expecting the same in Q4. And they only have the capital to cater to the retail segment growth which we are seeing in the economy. So any growth for the economy which comes has to be catered through only private sector banks, because public sector banks don't have money to lend. There is restrictions on the lending because of the GNPAs and everything out there. So, and this entire growth opportunity, the aggression which they market their products is pretty high in private sector banks. So as long as RBLs, Yes Bank, IndusInd Bank of the world keep on delivering 30+ kind of a growth numbers on the AUM, one has to keep on buying them. Let's not forget the story of HDFC Bank. It has always traded a higher valuation multiple, but it continues to do so because of the compounding of more than 20%. So the ones which are delivering, we should stick to them. So in the pecking order, RBL remains the top pick, followed by Yes Bank and IndusInd Bank.
What is also sort of catching up over the previous, I would say, 1 month, and in fact the PSU banking index has done much better than your overall Nifty banking index, considering it has actually given you a return of 19% over Nifty Bank's return of around 12%. Dharmesh, would you buy into this catch-up for the public sector banks at this point in time, or would you avoid them?
See, I won't say this is a catch-up by the public sector bank. It's more of some kind of a relief, trading bounces which we have seen in public sector bank. Because for the catch-up to happen, you need numbers to be in place. Q3 was good. It was definitely a promising set of numbers which was delivered by almost all the public sector banks. If the same number is delivered in Q4, then yes, the re-rating will definitely happen, and from here, the real meaningful rally will begin, because from where they are coming, we should see that not this 19% is meaningless unless you see from the type of correction which we have seen the stock prices and from the bounces which are there as of now. To my mind, I do believe, and our analysis does suggest that Q4 would be a better set of numbers for all these banks. And then if it comes out with a reassuring set of numbers, we would definitely be looking into them, and the ones which looks attractive to us is one is Indian Bank, followed by SBI and Bob. So SBI and Bob is almost there in everybody's list, but Indian Bank has maintained a good asset quality, barring the Q2 numbers which was somewhat alarming. So to my mind, I will leave this catch-up rally, I will leave it for trading play. But yes, post Q4 numbers, if those are in lines, one would be definitely looking at them with a serious investment perspective.
Okay, Jaiman, stay on. So much more to talk about, but let's get in a sense of what dealing rooms are recommending in the session today. Darshan and Yatin join in with their channel checks. Good afternoon, both of you. Yatin, let's start off with you first.
Neeraj, Tata Power is one stock which is quite active in trade. In fact, if you look at the performance in the last 2 or 3 days, we have seen some good volume build up there. Right now, the stock is up 1% off the day's high, but dealers on the basis of F&O trends recommend buy today, sell tomorrow kind of a strategy. Apart from that, do watch out for the entire tractor space. We have seen sharp selling coming in for both Mahindra and Mahindra as well as Escorts in the last 15-20 minutes of trade. And dealers do indicate that given the fact that tractor sales are muted, a lot of pressure is there already on inventories, and dealerships, probably these are the companies which would get impacted from the earnings side, and hence we are looking at some selling which is happening in for tractor companies. And more importantly, the Rabi sowing has not been that great, so the season per se for the Rabi side has not that been great. Probably that could impact all of these tractor companies in the short term. And finally, we have Wipro, wherein dealers indicate that FIIs are buyers in select IT stocks, Wipro being one of them, and dealers expect that momentum to continue. But Darshan has a few more stocks to talk about.
So PVR is something that dealers spoke about today. It's managed to cool off from the highs of the day, but nevertheless, there's a buzz of a potential corporate announcement that could come in very, very soon. So that's been spoken about in trade today. The other one is Karnataka Bank. It managed to hit a 52-week high in trade today. Dealers do believe that the momentum will continue today. At least in the last 15-20 minutes, a lot of these banks have come off because of the selling in the Nifty Bank. But nevertheless, at lower levels, dealers indicate that Karnataka Bank is being spoken about. And Aurobindo Pharma is something that dealers indicate. It's up almost 1%, but dealers indicate some of the domestic funds have been accumulating the counter.
All right, Darshan, thanks for joining us and getting us those dealing room checks and what the dealing rooms are recommending to their investors. I was actually also looking at some of the big movers on the NSE 500, and say for something like an Intellect Design Arena, what also stands out is the gains that we've seen in something like an Andhra Bank. If we can actually pull that one up, because there's a little bit of a surge coming in there. It's up 14.5%. And of course, this is following through on several other public sector banks, which have also gained in today's day of trade. Sumit, can I come to you on Andhra Bank? Anything that stands out for you here? Would you trade this one, or you'd want to avoid based on the kind of liquidity that you see in Andhra Bank?
See, better to avoid the long positions. I think there are many other stocks wherein we can initiate a fresh trading positions. No doubt the stock has given a very good move from lower levels. It has broken the 200 DMA levels, but better to avoid because risk-reward ratio is not in favor. And after such a strong move, the stock generally consolidates for next couple of days. So once we see the consolidation or once we see some profit booking, then one can initiate fresh long positions. At present, it's better to avoid.
It's interesting that now we are just 28 points in the green. We're talking about the possibilities of Nifty hitting the life highs tomorrow. Unless there's a strong rebound, now it's a few points away, 120 odd points away. What's leading the charge lower though? One, of course, the banks, and we'll come to them, but the non-banking names which are putting pressure. The contributors list should come up on your screen, but Eicher Motors, Titan Company, Mahindra and Mahindra, there's this wave of consumption names which are also pulling it down. There, the top losers will always be the banking names, but aside of the banks, I mean, these are the other ones that are looking slightly wobbly right now. And the Nifty Bank at 162, about 250 odd points off from the highs of the day. Before we get in the top trading call from our experts, Himen, the best index stock to short right now for a high risk trader, if there is one?
I'd go for a bank, Neeraj, whether it's Axis Bank or State Bank. ICICI Bank has come off a bit, so maybe on a bounce, but I guess it's one of the banks.
Okay, so if you want to do banks, then Himen prefers an Axis Bank or a State Bank, if I'm not wrong. Those are the names that Himen would look to short. Since it's 320 also, let's get in closing strategies. Would a banking name be your closing strategy, or do you have some other?
I think FMCG is also tempting, but I'll stick to banking.
Okay, so what, one of those two?
Yeah, I think State Bank, we're at around 322. 3.5 rupees stop loss, 7 rupee target.
Okay, so you'll sell State Bank right now, 3.5 rupees stop loss, 7 rupee target. That's a very quick STBT coming in from Himen. Sumit, your top trading call, your top closing strategy.
Bharti Airtel looks good to me. Our stock looks like on charts, it looks like that it can move up till 355, 360 levels. It's quoting at around 340, 341 levels. One can initiate Bharti Airtel long positions in Bharti Airtel at the current market price, with a stop loss to be placed at 333 on lower side for the upside target of 350 and then 360 levels in next couple of days.
Dharmesh, what do you do with do with the tractor companies? I doubt we've spoken about them, but Escorts in particular, their numbers were looking very strong a couple of quarters ago. Now they're starting to unravel a bit. Could there be more pain?
Yeah, definitely, because see, the entire tractor market is, catching up with the high base effect. And usually any commercial vehicles, after 2-3 years of a good run, there is a lag of 1 and 1.5 years. So that is more of a plateau kind of a year, or marginal degrowth kind of a year. So that has started happening a couple of months back. But what was happening was, whatever was the market share being lost by M&M or other tractor makers was gained by Scots. So 2 months this happened, and now we are seeing even deceleration in that process as well. So to my mind, this contraction is going to stay for a while, at least for next 4 to 5 months. And post monsoons, if everything is on lines and pretty rosy, then we may see some part of a pickup happening. But usually it takes at least 1 year to settle this out. So entire this year, FY20 would be difficult for tractor makers to post a decent growth. In fact, the market won't be going anywhere. It would be snatching of market share from one player to the other player, where Scots has been pretty powerful. But given the valuation at which they are trading, the type of numbers which are coming, I think it's time to take profits if you have not taken, and stay away from automobile space as a whole.
Okay, stay away from the automobile space as a whole. That's one of the verdicts that is coming in. Today, I think the other set of rate sensitives that have gone down include the real estate names. So Prestige Estates is down 4.5, DLF down about 3.5. Home improvement names, the likes of Kansai, Nerolac and a few others too, have corrected. And today Vodafone Idea, for example, has gone off in the session. A lot of smart money, trading money piled on in Vodafone Idea. And that stock has corrected a bit, about a couple of percentage points, 17.85. What is the world market doing? Just pull that up. So pull up what the European indices are doing, pull up what the Dow futures are doing. Could that have a bearing as well on what will happen tomorrow? Well, for now, the world markets are looking okay. So nothing untoward with Europe, US, which had the best quarter since a number of years now. Well, the Dow futures are pointing towards a robust uptake. So this pullback is happening sans global pressure. There's some very interesting out there. We don't have the money market cues to fall back upon to in the session today because the money markets were shut today or are shut today. But this is very interesting as to how the pullback came in. Maybe overbought or otherwise and cooling off, don't quite know. But hit the life high and then has come back quite rapidly. We spoke about trades on the Nifty Bank. The Nifty itself came in 11,649 ending at the lowest point of the day. Would you take a trade here?
No, because it's slightly different in the sense we saw gap up today, Neeraj. Normally stocks or indices have a tendency to try and cover the gap. It was an intraday gap. We've partially covered it. We've not fully covered it. Now, even if it gets covered tomorrow morning, this same gap will provide support for a bounce back. In this bounce back, if we don't cross today's high, and then make a lower bottom, Neeraj, I think that will be the time for the alarm bells to start ringing. Currently, no. Now, what has happened? The Bank Nifty covered the gap, gave a bounce, and has now covered it completely. So below 30,200 tomorrow, day after, whenever, I think Bank Nifty could weaken.
Okay, Dharmesh, if you can also come in on the real estate sector as a whole. I'm looking at the year-to-date gains for some of these names, and we have gains, substantial gains too, in something like a Godrej Properties, Oberoi Realty, Phoenix Mills, though that is not a full out-and-out real estate company, but Brigade Enterprises and Soba. Even DLF has caught up to a certain extent on a year-to-date basis. How are you, placed when it comes to the entire sector right now, and perhaps a few of these names?
See, the sector is still gloomy. I think nothing is happening on the sectoral front. So the sales are not picking up, and nothing is going strong out there. So it was just a trading bounce back, some catch-up kind of a thing which has happened. But I doubt where this is going to stay. So to my mind, this rally which has happened in the real estate sector should be taken an opportunity to exit and book your profits out. So I won't be interested in any of the real estate stock, only for if one has to really invest, Oberoi Realty stands out. Other than that, I will be avoiding all the real estate stocks.
Okay, well, on that note, let me also just take a technical view on DLF. Sumit, if you can come in on this one. It's weak today in trade, and this is after it has seen some amount of strength over the past 1 week or two. How are you reading into technicals for DLF?
Better to avoid long positions at current market price. Stock has given some correction from higher levels, and it's not sustaining about 200 EMA levels. It's present not sustaining about 200 levels. It's presently quoting at around 195. This stock, there is a possibility if the stock is able to break the lows, if the stock is able to break the support levels of 193, then we can see a move till 185 or even till 182 levels. So at present, it's better to avoid long positions till the time the stock is not able to give clear-cut breakout about 200 levels.
Okay, Dharmesh, of course, thank you for joining in today and giving us your thoughts. Technical experts request you just stay on for a bit.
Thank you so much.
We'll just take in final thoughts from you. But while we may be ending in the green, it's not a very pleasant close. It doesn't leave you, if you're a bull, doesn't leave you with a very happy feeling because we are ending almost at the lowest point of the day. I don't know if the breadth has corrected a bit because the breadth was very strong at a point of time, even when we started off the show, which is at 2 p.m. But the mid caps and the small caps will come up on your screen, and let's just see what's happened to those indices. The small cap space has stayed okay, but the mid cap space has certainly corrected. I reckon that the market breadth would have crisscrossed a little bit. We'll try and bring that up for you in moments from now. But first, let me talk about the Nifty 50 names. That's where the bulk of the action happened today. It actually happened in the Sensex, but the Nifty 2 moved to within kissing distance of all-time highs. What led it there? Tata Motors 7.5%. A note which was an April Fool's joke though. Quite out there. I hope people have not bought in on the back of that. Hindalco 5% higher, Wipro about 2.5%, Bharti 2.5%, Tata Steel 2.5%, Maruti 2.5%. So despite auto sales numbers not looking all that great, the stocks have done okay. Reliance Industries, the top contributor, up another couple of percentage points. What's not done well? Z, UPL. iShares is one of those auto names along with M&M which is not done well, and selectively banks like IndusInd and Axis too have come off in the session today. So banks kind of not too supportive in trade. Autos a mixed bag. Reliance Industries in the green. That's the summary of the large caps. What about the broader end of the spectrum, Agam?
Well, the broader market indices may have come off to a certain extent, but we still have more gainers against losers, at least as far as the NSE 500 is concerned. And we still have a minute left to go before closing, so that may change. But for now, we're looking at some sort of gains. Let me start with the Andhra Bank, because that's the one which is standing out in trade. Is the top Nifty NSE 500 gainer, up 15%, closing near day's highs. A lot of strength coming in there. PNB Housing Finance is the other one, which is also catching up with the rest of the finance companies. Housing Finance specifically in this case, so that's advancing by around nearly 9%. Moving on to Welspun Corp, we have addressed why we are seeing so much strength in this one. It's up 8.5%, likely to close thereabout as well. And IRB Infrastructure, which is also catching up with the rest of the infrastructure space. And the bulk of the gains have come in just the last 1 hour, as indicated by the intraday chart there, up 7%. We're also seeing a lot of strength in Delta Corp. Again, another one of the top gainers on the NSE 500. That's up 7% as well. And Intellect Design Arena, on account of a very large deal win, once again, on the back of which we're seeing further gains of as much as nearly 7% at around 217 for now. On the losing end, just a couple of stocks that I'd like to pull out here, and REC is of course one of them. So we're seeing a little bit of profit taking coming through after a very, very strong last week. It's down 5% right now, closing at day's lows. Pardon me. And the other stock that I want to address is also Prestige Estates, because that is also is under pressure right now. That's down 5% at around 241. So some bit of weakness there as well. But on the whole, it's been a relatively stable day of trade for the broader markets. And Neeraj, that's what we've been seeing. I wonder how different the advanced decline ratio will be for the National Stock Exchange as a whole in comparison to the NSE 500.
Well, maybe actually let's just pull that up, the market-wide market breadth, and see what's happened there. Well, yeah, compared to what it was, yes, a bit off, but still a strong close.
Yes, it's rather strong, because we still have 2 advances for 1 decline. So that may not be a ratio. And we must remember that the bout of profit taking has come essentially in just the last 15-20 odd minutes. So we may see that effect playing out. But I also want to address the contributors at this point in time. What's going on? What happened in the last 15-20 odd minutes? So the likes of your heavyweights, Reliance Industries, Infosys and TCS, essentially providing the bulk of your gains. Reliance Industries, the Nifty has advanced by around 30 to 31, 32 odd points, of which 24 odd points have been contributed only by Reliance Industries. Also a bulk of your total contributors in terms of the gaining end. On the losing end, of course, is essentially the HDFC Twins, a whole host of financials actually bearing down on the indices. So perhaps a bout of profit taking there.
Yeah, you're right. And then the turnover, and let's see if the cash market turnover. Well, yeah, it did pick up a bit, 38,000 crores. So that's actually high. Usually, you've been used to about 33,000. The last 2 days were a bit of an aberration, wherein we clocked in northwards of 40. But 37,000 crores is not a bad number either. F&O volume's a bit lower than what was usually the case the last few. So, though much higher, I believe, than Friday's session. So that's an interesting one. Interesting to see, Agam, what the FI flows look like. A small negative number the previous session.
Yeah, and that was surprising considering the kind of turnovers that we had seen on Friday. But well, you never know. We're going to have to wait and watch out for some of those numbers going in today as well.
Well, final thoughts from experts then. And Hemant, to you first. The strength in the broader end, would that come off too? Because you sounded slightly skeptical about the large caps. What about the broader markets?
Well, the mid caps have been underperforming for a long time, Neeraj. So, frankly speaking, I wouldn't expect them to correct that much, or if the mainline stocks slip into a correction, the mid caps would follow suit, because they've had almost a year of inactivity. So, there would be that relative strength coming in. And if they continue to do well, then the AD line, advanced decline line, remains positive. Then one would not expect the mainline stocks to cool off too much. So, frankly speaking, stock-specific movements should continue, and the mid-cap, small-caps might not react as negative.
Okay, Sumit, would you concur? It's going to be more about stocks than the indices from here on?
See, markets can be volatile because of the election, and in this volatility, if any deeper correction is seen in index or stocks, then that should be used as a buying opportunity. At present, for next 1 or 2 weeks, we feel that index will move up, and then index will consolidate and stock will pick up the pace. So overall, in the month of April, we are expecting a good upside move in index as well as in stocks. We are expecting index to touch 12,000 levels soon. So any dip in index should be used as buying opportunity, and same will be in the stocks. If any such correction is seen in frontliner stocks, we will be a buyer at the low levels.
Okay, we'll leave it at that. Gentlemen, both of you, thank you so much for taking the time out and being with us today. Really appreciate your time. And viewers, thanks for tuning into this leg of Countdown from Agam and me and the team that put this show together. Thanks much for watching.